So now look at D part. They are telling you to calculate the average rate of return, accounting rate of return of the project. So how to calculate ARR? Okay, again we have to draw columns. Okay, so first you have to find answers using this column, and then you have to take these answers and like you have to write the equation from the column, from the answers that you got from this column. You have to put it to the equation and find. So first step is you have to draw columns like this and find the profit. Okay. So this column method will be easy. Okay. So year one, you have the total income, you know, right? So what's the total income for year one? Income means
Uh,
what is income here in this question?
the net cash flow?
Not net cash flow. Now, okay, now look at this. Net cash flow is cash inflows and outflows. Okay. Cash inflows means only income. Cash outflows are expenses, right?
Ah, okay, right.
Did you understand?
Yeah,
So you have to think like that. Just you can't take the debt cash flow and put it under income. Okay. So only cash inflows are the income. Okay. So in this question, only cash inflows. So in your A part, you got cash inflows, right? For year 1, 2, 3, 4, 5. So you have to take those values and put under income. Did you understand?
yeah.
So write all the income for year 1, 2, 3, and 4.
Okay.
And then now look at cost. Okay. So cost, now I told in NPV, in payback period, in IRR, we should not take depreciation. But then when calculating ARR, we have to take depreciation, right?
Yeah, we should.
So how will you take the cost? Okay. So look at your answers in A part. In A part, you found out that including running cost, including depreciation, that is 400,000, right? For year one.
Yeah, yeah,
So after that 400,000 only we have minus the depreciation value and took. But before depreciation, including depreciation, it's 400,000, right?
yeah,
So what you have to do is the total, that is drivers paid charges, that one, that is 75,000 for year one. So 75,000 plus 400,000. Did you understand?
um, wait, but then could you explain it again?
Yeah. Okay, so it's like this. Now, to find the total cost means cash outflows, right?
Yeah,
So in A part, cash outflow, first diagram, first column, like the first part, we found out that the total drivers paid charges is 75,000. That answer plus the running cost will give total cash outflow, right?
yeah, good.
So same thing, instead of that running column, instead of those answers, you have to put including depreciation value. So
Right.
running, did you understand?
Yeah,
So running cost, we got running cost by excluding depreciation. That means we got running cost by minusing depreciation value, right? But
yeah,
then for this answer, you have to take the value which includes depreciation. Did you understand?
yeah, I understood that.
So in the second column diagram, second part in cash outflow, what we did is running cost 800 into 50 into 10, which is 400,000. So that 400,000 includes depreciation. From that 400,000 only we have minus depreciation value. So what you have to do, instead of taking, instead of minusing 110,000, just you have to take 400,000. So that includes depreciation. So what you have to do, 75,000 plus 400,000, year one. And then year two, 97,500 plus 400,000. Year three, 97,500 plus 450,000. Did you understand like that?
Right, okay.
Are you sure that you understood now?
Yeah, but then could you do one for the year one part?
Okay, do you want me to do it in the whiteboard?
Yeah, yeah.
Okay. Okay, so you said me to explain again. I'll explain you. Okay, so now why we didn't take in net present value, payback period and all, we don't take depreciation, right? Okay, because depreciation does not involve any cash movement. But then ARR, we have to take depreciation because we have to find the profit. Okay. So what you
Yeah,
have to do is, in previous questions, we found by minusing depreciation value, right?
yeah,
Okay, but in this question, we have to include that value and get the profit, get the cost, get the cash outflow. Okay, so can you remember in A part what we did for the cash outflow? Look at cash outflow because cost means it's cash outflow. Okay, so in the second part that we did, can you remember I have given here 1, 2, 3, 4, 5 and then running cost 800 into 50 into 10, that is 400,000. And then the depreciation value we have to minus and then the total. So look at that. Okay, before that, look at the question. In the question, they are saying in year 5, okay, other running cost including depreciation. So in the question, they have told including depreciation, other running cost including depreciation. So for all the years, running cost has depreciation. So if you simply take that value, it's correct. So simply you have to take running cost value instead of taking the total. Instead of taking, like, from running cost we have minus depreciation, right? So instead of minusing that and taking the total answer, just the running cost value if you take, it's enough. That is year 1 400,000, year 2 400,000, year 3 450, and year 4 450,000, and year 5 500,000, because that answer includes depreciation. Because look at the question. In question they are saying year 1 and 2 other running cost including depreciation, year 3 and 4 other running cost including depreciation, year 5 other running cost including depreciation. So they have included depreciation in running cost itself. So if you simply take that running cost value before minusing depreciation, that's correct. Did you understand now?
right. Yeah, now I understood. Yeah.
Okay, do you want me to explain again?
No, no, now it's fine.
Okay. So now to find the cash outflow, that is to find the cost, what you have to do, the driver's paid charges, that is 75,000, right? For year 1.
Yeah,
So that answer plus the running cost, including depreciation, which is 400,000. Then you will get the answer. And then for year 2, driver's paid charges total is 97,500. So how to find the cost is 97,500 plus 400,000. Year 3, that is 97,500 plus 450,000. Year 4, 120,000 plus 450,000. Year 5, 120,000 plus 500,000. Did you understand?
yeah, now I understood.
Okay. So now you asked me, are we taking that 50,000 saleable value, right?
Yeah,
So based on my note, what I have said is 50,000 must not be taken when calculating ARR because it is a cash received amount, right? From now you're selling an asset and you're getting that cash amount, right? In cash amount. So you're getting that cash. You're receiving that cash. So 50,000 must not be taken because it is a cash received amount. Okay. When calculating profits, you should not take sales value. You must only take profit or loss on disposal amount. Okay, so if you get profit on disposal, you take it as income. If you get loss on disposal, it's an expense. So only profit or loss on disposal amount you have to take. You should not take the sales value. Now, when you are selling an asset and when you are receiving money, you should not take that value when calculating ARR. That is the rule. Did you understand that?
yeah, I understood. Yeah.
Okay, so for this question, don't take that 50,000. Just put 840,000 as income for the fifth year. Okay.
Okay.
So now ARR means average profit divided by average investment into 100. And then down show workings and then write average profit. So how to calculate average profit? Average profit equals total profit divided by number of years. So in this question, total profit is 515,000 and then number of years is 5. So 515,000 divided by 5 will give you 103,000. So that 103,000 you have to put it in this equation. So under A average profit, put 103,000. Okay. So now how do you find average investment?
Uh,
So again under workings, show average investment. Okay.
600,000.
I can't hear you.
600,000 divided by 5.
600,000 divided by 5. What did you say?
Yeah, 600,000 divided by 5 because the total investment over the number of years to operate for.
No. Can you remember when teaching the notes, I said you average investment. It's always divided by 2. Okay. Total cost of the
Ah, yeah.
project divided by 2. Can you remember?
Yeah.
So it's not 600,000 divided by 2. We have to add that 50,000 also for average investment. Okay, because cash received from sales of delivery vehicle, we have got that. It's also, um it's also an amount that we received, right? So for cost of the project, you have to include 50,000. Did you understand?
Yeah.
Okay, so put average investment and then write cost of the project divided by 2. So cost of the project will be 600,000 plus 50,000. You have to write that 50,000 and then divided by 2. So 650,000 divided by 2 will give you 325,000. So now in ARR equation, put average profit divided by average investment value into 100. Then you will get the answer. Did you understand how to do this?
Yeah, I understood.
Okay. So do this and tell me the answer. So in this question, they are saying you evaluate the project for HK Parcels PLC using your calculations and any other relevant factors. So based on your calculations on A part, B part, C part, and all that, you have to evaluate the project whether they are in whether the amount whether the profit on the investment is good or whether it's not good, whether it's a healthy return, okay, whether they should continue with this project or whether they should not carry out this project. Did you understand? Like that, you have to evaluate the project. Did you understand?
Yeah, I did.
Okay, so what you can say is you can say um, it is better if they take out this project, if they invest in this project, because the investment pays back within 5 years. So within 5 years itself they are achieving, the payback period is within 5 years, that is 3 years and 7.74 months. So it is good within 5 years, like within 3 years and 7.74 months, they will be able to cover up their investment costs. Did you understand?
Yeah, I did.
So you can tell like that. And then you can say the accounting rate of return is very healthy, which is 31.69%. And this is higher than the cost of capital. So the cost of capital is 20%, right? But so this value 31.69% is higher than 20%. So which is good. Like that you can say. And then you can say the new vehicles are electric and replacing older diesel models. So this means they are more environment friendly type, okay, and will help the community, okay. So this may result in customers paying extra, okay, in extra customers. So when they are environment friendly, lots of customers will like to purchase these vehicles, right?
Yeah.
Okay, so you can say like that. And then green credential means the qualities that show you believe it is more important to protect the natural environment. Okay, so customers who wish to protect the environment, they will be happy and purchase these electric vehicles. So the number of customers will increase, leading to higher sales and profits. Like that, you can say. Okay. So and then you can tell, however, the investment is not good for them. okay, because the net present value of the project is negative, okay, which is 33,282.5. And then you can say the NPV method is a preferred method of evaluating a project, as it takes account of the time value of money, but the NPV has a minus value. Therefore it is not good if they invest in this project. Did you understand? Like that, you can give your own, you can write it in your own words, okay. And then you can say the payback method and ARR rate do not take account of the falling value of money over time, okay. So you can tell that, therefore we have to consider all that, okay. We have to consider net present value and IRR also, like that you can say. And then you can say the company is already struggling in a competitive market, okay, so which will result in even more problems, like that you can evaluate. And then for other considerations you can tell the cost of capital for the company is very high because it's 20%, right? So has the company and the project are high risk, okay, so you can tell like that. And then you can say if HK parcels shop around. That means shop around means if they go around buying 10 delivery electric vehicles, then they'll be able to find a bank. They will then you have to tell, will they be able to find a bank that is willing to lend a lower cost of capital? So a bank that is lending them a lower cost of capital, will they be able to find that? So that is also a problem. And then you can say could HK parcels fund the project through a share issue? Like that, you can give other considerations. And then shareholders will probably settle for a lower rate than 20%. So some shareholders won't agree for that 20%. Okay. So, and then you can say the project anticipates that drivers will not have a pay rise per parcel for 5 years. So will drivers be happy with this? So now drivers are not getting a salary increase, right? So will drivers be happy with that? Okay, and will they leave? Like that you can say. Some drivers may leave because of getting a low salary. Like that you can give other considerations. And then you can say it is estimated that drivers will earn more as the number of deliveries per day rise over time. Okay, but it's all only estimates, all only predictions. So we can't make sure that drivers will gain a higher revenue. Okay, will gain a higher wage. Like that, you can say. Um, so you can, and also you can say the figures given are only estimates. Okay, so will the revenue and cost be different? Okay, with the predicted values. Okay, like that you can give. And then you can say for conclusion, so based on your opinion only you have to give. So you can say investment may or may not be financially worthwhile. Okay, so NPV says do not invest, but payback and ARR says to invest because it paybacks within 3 years and 7.7 months, and ARR rate also very healthy. So you can say payback and ARR says to invest, and NPV says do not invest. So, and then you can say instead of considering only NPV, ARR, and payback, this HK parcel should also calculate its IRR, that is internal rate of return value also. So you can tell like that, and then you can say. I think they should not invest in this project because NPV is a negative value. Like that, you have to write. Did you understand how to write, Amhar?
Yeah, I do.
Do you have any doubts?
No, I don't.
Okay. So in May 2020 paper, okay, question number 6, the cost of the project. What will be the cost of the project?
399,000 plus 35,000.
Yes, correct. So that is the cost of the project, okay. But then in first part, okay, in first part they're saying you to complete the table on page 34 in question paper for the project to show expected cost, revenue, and net profit for the year trading 2022. So after that only you have to calculate ARR and payback method. Okay. Okay, so look at the
Okay.
question paper. In that table, you have got that table, right?
Yeah, I have.
Okay. So in that table, revenue, passenger revenue. So for June, July, August, you have to find. So how do you find passenger revenue for June? Just think and tell me.
So the cost will be £5 for the ticket,
Okay.
and we need to calculate the revenue, right?
Yeah, passenger revenue.
So the cost will be five, and average spending of one passenger will be two, so total will be seven. And the ship has a capacity of 120 passengers. So in June, 50% of the capacity is likely to be used. So that's 60 passengers. So that's 7 into 60. And there's per day, there's 7 trips. So
Okay.
that's 7 into 7. And that into 30 because that's 30 days of operation.
So 60 into 30 into 7 into 5.
Yeah.
Okay. Then why did you say 2 for the refreshment part?
Mm, because that should be added for the revenue, right? Because the total cost, I mean, the total spending will be 7 by passenger for this.
Okay, but then passenger revenue don't need to take that too. Separately, they have showed refreshments. Can you see? Separately, another next line, they have showed refreshments. So in that only you have to take that two and
Okay.
show. Did you understand?
All right. Okay.
Okay, so in passenger revenue, it's 60 into 30. We are 60 passengers, okay, because that 50% capacity. So 120 into 50% will give 60. So 60 into 30, because that's the number of days operating, and then into 7, and number of trips per day. So it's 7 into 5, because it's £5, okay, the ticket price. So 16 to 30 into 7 into 5, that will give you the amount for June. And then for July, how will you find?
Uh, so July will be 80% of 120,
Yeah.
which is 96.
Okay, correct.
So that's going to be 5 into 96 into 8 into 31.
Yes, correct.